Hi there, welcome back. Having learned profitability ratio, liquidity ratio, long-term solvency ratio, and efficiency ratio, the last but not the least is investors ratio. So if the company is a public limited liability company, all this ratio will also make sense. In fact, it will make more sense, right? So this investors ratio just tell us how the business is performing in terms of returns to its investors, right? One of them is earnings per share. From the word earnings per share, how much is each unit of share earning for the shareholders, right? And of course, the formula for that will be profit after tax minus preference dividend. So in case you have preference shareholders, that you have to pay them dividend in hierarchy of settling interest. We call them fixed interest. You pay them first before the ordinary shareholders, because the ordinary shareholders are those who have residual interest, right, in the assets of the company. So you have to pay them first. Don't forget that the profit that is available to shareholders are when everybody has been paid, including preference shareholders, right? So if you have paid preference shareholders preference dividend, then what is left divided by the number of shares in issue. That tells us the earning per share. Alright, and in this case is $1.86 per share. That means each unit of share is able to earn $1.86, right? Which you can say relatively looks good depending on the metrics you are looking at, right? Because this just indicates that the business is able to deliver relatively good return on its shares. That's just what that speaks to. Are you able to deliver relatively good return on the shares? That's what earnings per share also speaks to. There's an accounting standard that also addresses that. That is IAS 33, International Accounting Standard 33, earnings per share. It explicitly explains how this is to be recognized when you have to restate them, amongst other things. But it's nothing to be bothered about. Now, dividend per share. Dividend per share also just speaks to the dividend you have paid divided by the number of shares. How much dividend is each unit of share worth? How much dividend? That's what that is speaking to. And of course, from the information we have been provided, is showing $2. And what does that mean? It shows that the business is able to deliver $2 per share in dividend to its shareholders. That's just what it speaks to, right? And you may say this is relatively good. Mind you, we are saying this is relatively good. We are not comparing it with any industry average, right? And it may connote that the business have a good dividend policy, right? Of course, dividend policy is one of the decisions that a business must make anytime they declare dividend, I mean. So when they declare dividend, they ask themselves, are we paying this dividend in cash? Are we paying it in shares, amongst other things? And when the company makes profit, generally you decide on the amount to declare as dividends, that we call as payout ratio, and the amount you want to retain in the business for business growth. We've also mentioned business growth strategies in the course of these lectures. So that is what dividend policy is all about, just making sure that decisions are made around the dividend of the company. So what this just shows is that, of course, each unit of share is worth $2 in terms of dividend. And of course, the dividend yield, which is your dividend per share over the market price of your share, we are not able to calculate it in this case because the information was not provided in the books of early finance. Now you have been able to learn basic preparation of financial report for a micro business. You've also been able to learn financial statement analysis, and importantly, the interpretation of all of those ratios. These are ratios that you should watch out for. You should have a mechanism in your business to make sure that you get this report as a business owner and you're able to make sense of this. So they help you make decisions, and you are able to make well-informed decisions, and your business is positioned strategically to take advantage inherent in the markets you have decided to play in or operate in. Right? Thank you very much for following through.